Alright, so you're a student in Canada and you're wondering how to approach filing your taxes this season, right? Well, today's video is actually the third in a series that I've released on the channel lately covering how to file your taxes this season. Definitely make sure to check out the other content I've made about this topic after watching today's video all the way through. Because in this one, we'll be covering some considerations to account for if you are in fact a student, but everything else has to do with even filing your taxes in the first place applies in the exact same manner. Now, I know that a large portion of my audience is under 30 years old, meaning quite a few of you watching could in fact still be students, and I've even had many subscribers directly ask me if as a student they need to go about filing a tax return, and the short answer is no, not necessarily. Technically, you only need to file a tax return if you have taxes owing or need to declare any income that you generated over the course of the previous year, whatever type of income that might be. Right, so even if you are a student right now but you work part-time at the subway on campus, well, of course you would then need to file a tax return because you made some income that needs to be declared to the CRA, whether or not you're going to be receiving a tax return or not. And anyways, you'd want to file that return in order to get a refund if you've overpaid on your taxes throughout the course of the year on your pay stubs. Now with that said though, as a student, there are some additional things that you need to take into consideration that we'll be covering today. If at any point in today's video you find value, please take a second to drop a like. It takes me a ton of time to make these videos and put them together for you. And if you want to learn more, make sure to subscribe to the channel and hit the bell button for more in the future. With that said, let's get into it. Alright, so before covering any student-specific deductions and forms to include on your return, it's important that you understand that any other regular tax form will still apply to you if you did something over the course of the previous year that requires that tax form to be included on your return in the first place. So what I mean by this is, for example, if you worked a job, well, that's employment income that you'll need to declare on your tax return. And so your employer will prepare a T4 slip and you're going to include that T4 on your return like anyone else. Additionally, if you have, say, a side hustle or a small business, well, that's personal business income that you'll need to declare in a T2125 form, once again, like everyone else. By the way, if you want to learn more about how that works, definitely check out the video that I'm listing right here after, of course, finishing today's video. Okay, so the point is that as a student, yes, there are some student-specific forms that you will also include, but this doesn't excuse you from any of the other regular forms that you still need to account for if they apply to you. Let's now speak about student-specific types of income that might apply to you, because pretty much all forms of income will be taxable, or at the very least do need to be declared to the CRA. So these types of income include the following: employment income, tips and other occasional earnings, investment income, registered education savings plan payments, scholarships, fellowships, bursaries, and study grants, as well as apprenticeship grants, potentially if that applies to you, research grants, and artists project grants. All of these are forms of taxable income that at the very least you'll need to be declaring on your tax return, and you may have a tax credit available depending on your situation. So everything we just covered does need to be declared, but based on certain specifics and technicalities, you might be eligible for some non-refundable tax credits relative to some of these types of income, such as the scholarship exemption, but again, you will still need to declare all of this income on your return. In fact, while we're on the subject, let's actually speak about scholarships right now. Straight off the bat, any elementary or secondary school scholarships or bursaries are not taxable. I thought I'd mention it, even though chances are most of you are going to be either in college or university right now. So for post-secondary programs though, you may be eligible for what's known as the scholarship exemption, which would allow you to exclude from your income a portion or all of the income that you received for scholarships, bursaries, and grants. This is definitely something to consider and look into if you do have scholarships or bursaries, because this could represent thousands of dollars in saved taxes over the course of an entire post-secondary education. Additionally though, any income that you're making over the scholarship exemption would then need to be declared as regular taxable income. So if you want to be certain as to the amount of the exemption that you may be entitled to, you can use this chart to calculate that value. Feel free once again to pause the video in order to take a look at that, or you can also go online and find this chart for yourself. Additionally, if you received a research grant, you can subtract your expenses incurred for that grant and declare them on your tax return on line 10,400, but your expenses cannot exceed the amount of the entire grant as a whole. Okay, moving on, as a student, it's highly possible that you're utilizing an RESP in order to pay for your school expenses, as well as any other just living expenses that you're incurring throughout the course of your studies. Essentially, whether or not RESP withdrawals are subject to tax or not depends on the nature of the withdrawals in question that may or may not be taxable. Now, when RESP contributions are withdrawn from the account, generally meaning money your parents put in the account in the first place for you, well, as the subscriber, you, the student, can receive those withdrawn contributions tax-free. Where tax is involved here is when RESP withdrawals include investment earnings as well as government incentives within the account itself. Let's remember here, an RESP is an investment account, and so hopefully the contributions made both from the government and say your parents or anyone else who's contributed to the account have grown in value. Well, any of the earnings on those investments, including interest, dividends, etc., would be subject to tax upon withdrawal. This means that that portion of any withdrawals will be taxable by the student in question on your own tax return. As an example, say your parents contributed $10,000 to an RESP, which grew over time to $15,000. Well, when you go to withdraw that entire $15,000, $10,000 of which will not be subject to tax, and then the other $5,000, which was interest and earnings, will be subject to tax by you, the student, on your own tax return. By the way, you'll receive a tax package from the financial institution where your RESP is held. That's going to outline the difference between non-taxable versus taxable amounts. You'll just have to utilize those forms to input into your own tax return when filing it. Alright, you might not be aware of this, but there are some deductions you can take from your income if you're a student enrolled full-time, notably in relation to moving for attendance or employment. So in moving for employment, this includes summer employment or if you run a business. And these moving expenses need to be deducted from your employment or self-employment income that you generated at the new location. You can also claim these expenses if you move to go back to university or college after a semester as a co-op student. That said, these expenses cannot be claimed yourself if they were paid for by your employer, of course, and in both cases, your new home must be 40 kilometers closer to the educational institution or place of work. Let's now speak about federal non-refundable tax credits, which can reduce your federal tax up to the amount owing. By the way, these are called non-refundable tax credits because you can only utilize them by reducing your tax owing all the way up to a balance of 0. You can't get a return for these if it exceeds 0 tax owing. Now, the most common federal non-refundable tax credits that are applicable to students specifically would be as follows. So first and foremost, we have the Canada employment amount, which is on line 31,260 of your return, followed with the interest paid on student loans. Yes, interest paid on student loans is tax deductible, and you would claim that on line 31,900. Finally, you can also claim a portion of your tuition, education, and textbooks previous to 2017 for the education and textbooks amount, all of which though will be reported on line 32,300 of your return. So yeah, the federal education and textbook tax credits did get eliminated in 2017, but this measure did not apply to tuition fees, which are still going to be tax deductible, as well as the fact that this does not affect the carry forward nature of the textbook and education tax credits that were incurred before 2017 that you have not yet claimed on your tax returns. And by the way, students of all provinces and territories except Quebec can calculate the non-refundable tax credits available on Form 428. Moving on here, if you received a student loan under either the Canada Student Loans Act, the Canada Student Financial Assistance Act, or the Apprentice Loans Act, you can actually deduct the interest that you paid on those loans from your taxable income. And this is going to be reported on line 31,900. In fact, this is somewhat similar to if you have a business and you're utilizing loans to either invest with or utilize for a business, you are able to deduct the interest paid on those loans. This is sort of a similar situation here for students and their student loans. Additionally, from a strategy standpoint here, if you don't have any taxes owing for, say, this calendar year, but you did incur some interest on loans, student loans over the course of 2022, well, then it would be in your best interest to simply carry forward that interest that you paid on your loans for a year in the future, where you'll have a higher tax balance owing to offset that tax. This is because you can carry forward the interest that you owe for up to 5 years, so long as you haven't already claimed that interest on a previous return. So this is very similar to strategizing your RRSP contributions, where you can potentially also carry forward those contributions in order to offset the taxes owing in a year where you may be making more income and therefore you'd be in a higher marginal tax bracket. So as a student right now, let's say you only made $20,000 in 2022. Well, therefore you'd be in a very low marginal tax bracket and you wouldn't have much tax to pay in the first place. Considering, let's say you also made RRSP deductions, chances are you're not going to be paying much tax for 2022. What would be more strategic here, if you have thousands of dollars in interest paid on student loans, would be to simply wait and carry forward those amounts to say when you graduated and you're making $60,000, therefore those deductions will be hitting a lot harder and you're going to pay much less tax on a relative and marginal basis. Granted though that it is within 5 years of incurring that interest. And finally, as a student, one of the most important tax benefits here is that you can claim your tuition and enrollment fees as non-refundable tax credits, which will be accounted for when you receive a form from your educational institution, which will be one of the following. I'll be reading them here because I don't know these off the top of my head. It's going to be either a T2202 form, which is the tuition and enrollment certificate. Other applicable ones include form TL11A, TL11C, and TL11D, all of which have to do with either your residency as a Canadian and or doing your education inside or outside of Canada. But regardless, you're going to still want to utilize these forms to report them on your tax return because tuitions and other enrollment fees are non-refundable tax credits. Now, there are actually many different payments and amounts that will be considered as these tuition and enrollment fees, but all of them will be grouped together on your T2202 form in the first place. So it doesn't really matter that I go through everything that would be applicable here. What does matter is that you get your hands on this form from your educational institution so that you can properly report it over to the CRA on your own tax return. And by the way, it's as simple as typing in, say, T2202 form within Wealthsimple Tax or whatever other platform you're utilizing to file your taxes this year, and you'll then simply be presented with this form that you can then fill out and it will automatically reflect over in your tax return. And by the way, you can also carry forward your unused federal tuition fees. However, you need to claim these amounts on the first year's tax return where you have tax owing and you have to pay tax essentially. And so that just about covers what might be different when filing your taxes this year as a student. If you have any other questions, by the way, make sure to let me know down below in the comments. I'll do some research and try to answer as best as I can. If you enjoyed the video, as always, please take a second, drop a like, subscribe to the channel, and hit the bell if you're interested in more personal finance, tax, and investing content in the future. These videos take me a ton of time to make, so I really appreciate it. And also, of course, if you do still need to go ahead and file your taxes now, make sure to check out the video that I'll be highlighting at the end of this video, walking you through exactly how you can do this completely for free. Thanks a lot for watching, and I'll see you in the next one.